The most important facet of your financial life that you can understand is cash flow, money in and out. It's not always about profit, because when you get more advanced with accounting, you can actually have a profit but have no positive cash flow. And cash flow, the easiest way to understand it without getting too complicated, is bank accounts either going up or down. And the first thing you want to do in life before you try to make $1 million or six figures is you have to change the direction of your bank account. And so that's point A. Understand your monthly cash flow. So if I asked you right now, what was your bank account's cash flow last month? Was it positive or negative? Simple. If it went up, it's positive. If it went down, it's negative. And you want it to either be, at the worst case, flat line. You don't want it to be negative. It doesn't take long of letting yourself go negative that you can't recover from it. It's pretty dangerous.
My financial plan is to buy and hold things that produce me cash flow. If that's ETFs that produce dividends, if that's crypto that produces cash flow through delegation, if that's through real estate, my plan is to buy and hold these things that produce cash flow and then live off that cash flow.
You hear about this capital gains tax on millionaires? Or dude, this is bad, man. We're both millionaires. We are both millionaires. And it's coming right before I buy that Japanese toaster. So how do I avoid this? Well, the capital gains tax means you get taxed on any profit you make after you sell an investment like a stock. Okay, and how much do I get taxed? About 40%. 40%? Why aren't people talking about this? Apparently, people like us are only 0.3% of the population. If I'm getting taxed on my gains, I need to find stocks that will lose me money. But where will I find that? Who's dumb enough to— Gentlemen, our specials tonight are the lobster— You poor person! Do you invest? Yeah, but mostly with like Reddit and stuff. That's perfect. What are you invested in? I got a lot of meme stocks like AMC, GameStop. I have a ton of Dogecoin. No, that's perfect. I'll join you. Cool! I'll have my losses in no time. Hey, thanks for encouraging me on those investment, fellas. I was about to sell right before I met you, just in time for the great meme stock rally of 2021. Who would have guessed it? And how about that capital gain tax, huh? Pretty bad for us millionaires. Hey, hope you enjoyed your meal, gentlemen. Now, will you be paying in cash, card, or Doge?
Most popular capital gains questions answered. Hey guys, I get asked at least 10 times a day the same question on capital gains. So here's the answer. If you're an individual and you make less than $40,000 on ordinary income, then you pay 0% in capital gains tax. If you're married, filing jointly, that's $80,000. If, as an individual, you make between $40,000 and $440,000 in ordinary income, you pay capital gains tax of 15%. That's bumped to about $500,000 if you're married, filing jointly. If you make more than $440,000, or $500,000 if you're married, then you pay 20% tax in capital gains. Remember, short-term capital gains are really ordinary income.
I'm now going to be explaining what free cash flow is and its relevance to analyzing a cash flow statement. So free cash flow, in short, is the amount of cash that remains in a business after all of the expenditures have been paid off. These can consist of anything such as debts, expenses, salaries, wages, fixed assets, and more. Ultimately, free cash flow represents a company's current cash value. Using the same real-life example of Tesla's financials, when you look at the very bottom of the cash flow statement, you can see that this is provided to you. It shows that the company in the trailing 12 months has a free cash flow of $1.827 billion. Essentially, this is the amount of disposable cash that is in the business. Though this does not take into consideration a business's potential for growth, it provides the most accurate and objective estimate of a company's present value, the cash left over. You can calculate free cash flow on your own if it's not provided to you, but most companies should already have this available on their cash flow statements. I'll leave the formula right here, so if you need it in the future, you can use it. Up next is comprehensive free cash flow coverage ratios. So make sure to click the plus to follow for more and stay tuned.